Good evening, traders. As we wrap up today's session, the focus remains on a slowing US economy, oil's struggle to find balance, and gold's short-term correction risks. The US economy is showing signs of stagflation, while crude oil continues to trade below fair value, and gold remains range-bound ahead of key inflation data. Let's break it all down. So Bank of America lowered its Q4 US growth forecast from 2.3% to 1.8% while raising inflation expectations. February's core PCE is expected to rise 0.4% month on month, with inflation potentially peaking at 3% in Q3 and staying there through Q4. The April 2 tariffs could increase the effective tariff rate by 1.5% to 2%, creating more uncertainty. In a mild stagflation scenario, the Fed is likely to hold rates steady, but if unemployment rises to 4.5%, we could see 200 basis points of rate cuts, which could increase recession risks. For now, the Fed remains in a wait-and-see mode, balancing growth concerns with inflation risks. Oil, on the other hand, continues to trade below fair value as OPEC sticks to its gradual production increases despite Brent nearing its lowest levels since 2021. Historically, OPEC steps in to support prices, but so far we haven't seen a major shift in strategy. For OPEC to change course, we need a sudden demand drop or a major supply increase, neither of which has happened yet. On the demand side, Europe and Asia's growth outlooks have improved, helping balance slower US GDP expectations. WTI remains range-bound, with traders waiting for clearer supply and demand signals before the next move. Gold, on the other hand, remains in consolidation mode, holding steady after its recent correction. US core PCE data and tariff policy updates are the next big catalysts for price action. Despite the US dollar index dropping 3.4% in March, gold hasn't fully capitalized yet. If tariffs escalate, gold could push towards 3,100, while a milder policy stance might briefly drop it below $3,000. Cooling inflation data this week could reinforce a dovish Fed outlook, which would increase gold's appeal in the coming sessions. So what's the big picture? US growth is slowing, oil is searching for balance, and gold is waiting for its next big move. With the Fed watching inflation and tariffs set to impact markets, the coming days could bring more volatility. So stay sharp, manage your risk, and I'll see you in the next session.